All right, traders, it is time to prepare to trade the best setups at the best prices. We're going to be doing a newly updated price action analysis on the SPY, going over our new key levels where we're interested in buying call options to go long and put options to go short. We're going to be discussing today's trends and patterns that you can use moving forward heading into your trading career, giving you those tips and tricks. Let's get straight into the analysis. So what you're looking at is a 30-minute chart of the SPY. As you know, and so in terms of, let's just kind of recap what happened today. SPY ended up going under the previous closing price, then it reversed. Once it bombed at this previous resistance, reacted as support, nice bullish trend reversal wick, and it continued to trend higher. Here's one tip I can give you with the previous closing price. Previous closing price will always be a daily key level that I like to use. If you see a strong breakout above the previous closing price and SPY is not at the top of a major resistance channel, it's in the middle or it's towards the lower end of the channel, right? And you see a strong breakout above the previous closing price, wait for it to drop back down and retest. The initial reaction, the first reaction on that retest, should be support. It should bounce. Doesn't mean it's going to go overall bullish, but you could see it had a nice break above this white line, the previous closing price, and then it retested, bottomed, formed a bullish 30-minute candlestick. Then it continued to push even higher. And here's an even better trade, right? So we know it's breaking above the previous closing price. We know it's forming support and higher support at the previous closing price. And we know it's even breaking out higher than the previous breakout level right here. These are all bullish confirmations. So imagine if we had some sort of overreaction where the SPY just had a massive drop all the way back to the previous closing price. Would you be interested in buying at that level? Keep in mind that SPY's been breaking out. It's been retesting previous closing price, reacting as support, and it's been pushing higher. With that knowledge and overreaction reversals, would you be interested in buying calls at the previous closing price? Yes. So that's your key confirmation to be buying into this fear, into this dip, and then to be selling into that rip, right? So just always be aware of that breakout strategy. You can use that at previous closing price. You can use it at previous resistance levels that have not been tested. You can use it at key lower to mid levels within the overall channel, right? We know the bottom of the channel is 405 and 408 gap, and the top of the channel is 414 to 415.50 gap right here, right? So with that being said, that's the main tip in terms of what I could bring awareness to in terms of today's price action. Also, if you see a floor that is forming at previous resistance, this is your previous resistance, previous resistance, previous resistance. SPY's been breaking out. It's been bottoming at previous closing price, and it's been forming a floor above that previous resistance. That's all bullish confirmations that it's going to continue to trend higher. Another thing is to not get faked out. And a lot of people, if you're using the 30-minute chart, will think that this is a bearish confirmation, but it's actually not the most bearish confirmation. It could be a bullish confirmation depending on, how we reacted on the chart and if we're on an uptrend. People will see these long wicks. So you have this like long wick right here. They'll see this and they'll think, oh, it's bearish. But typically in my experience, especially when we're on an uptrend or if we're at a key level or if it's forming a floor at a previous resistance level, after breaking out, which is bullish, in my experience, it'll shoot back up and retest the high of that wick, right? So for example, this is a resistance level at 412. We had a massive breakout above the resistance, which is bullish. We bottomed at previous closing price, which is bullish. So if SPY breaks above this resistance again and it forms a floor, the bottom of these 30 minutes are at the previous resistance, that's bullish, right? So if you see that occurring, what's going to happen is the SPY is going to try to retest the high of this wick. So the high of this wick is at 412.80. It closed at 412.40. Since there's a double bottom and a floor at the previous resistance, it's going to try to shoot back up to retest the high of this wick. So you can buy into the opening of this 30-minute candlestick, and then you could sell into the high of the previous 30-minute candlestick. You can even see that same theory worked right here. SPY formed a floor at the previous 30-minute. I get this looks bearish, but it did form a floor at the previous 30-minute, and then it retested the high of that wick. So just keep that in mind, because I will see that happen a lot where people think these wicks are bearish, but they actually shoot back up to retest the wick, which is an opportunity for a quick scalp on a call option. Also pay attention to trend reversal 30-minute candlesticks. take a look at this candlestick right here. So this is a nice bullish 30-minute trend reversal candlestick right here towards key support, and then it starts to go up and it retests the high of the wick. That's not the first time that happened throughout the past 10 days. You could see that same candlestick ended up forming recently. Right here, you have that same 30-minute bullish trend reversal candlestick, and SPY started to trend up, retested the high of the wick. Also pay attention to the bullish hammers. SPY is dropping, but it's bottoming at previous resistance, bullish hammer, then it starts to uptrend. So just be aware of those 30-minute candlesticks because they can be extremely and highly predictable. And with that being said, pay attention to those wicks, man. You could see right here, you had a strong wick. You had a strong overreaction wick right here. What did SPY do next 30 minutes? It pushed higher. And then you have the same thing right here. You had a strong wick at previous closing price. What did SPY do next 30 minutes? It started to push higher, right? So that same pattern, that same type of history repeated itself. You could see you had that same overall wick right here. What did SPY do overall next hour? It started to push higher, right? So just pay attention to those wicks and those 30-minute candlesticks. They're really going to help you in terms of identifying patterns and recognizing trends, right? So with that being said, in terms of where we're at the market, it's at 413. The top of the channel is towards 414 to 415.50, right? Our best level for puts to short, even without a bearish confirmation, I'd be willing to get in, $415.50. Our new key level is our previous closing price, $413. $413 represents the upper end of resistance. So what I need you to understand heading into tomorrow is that 413 is make or break. If it holds, reacts as a support level, then they're going to send this to the next resistance, which will be around 414.30. If they break above that, then we go to 415.50, best level for puts. If you see a roof or bearish confirmations at $415.50, $414 or $413, then it's going to be puts with overall tight stops. The lower the level, the tighter the stop. Use very bearish 30-minute confirmations on not the best levels. If it's not the best levels, I would focus on a 30-minute confirmation. If it's at the best level, I would focus more on the 1-minute chart. Those are some other tips and tricks that I can give you. Now, in terms of 413, if we react as a resistance level, we will be revisiting $411.59. The initial reaction should be a bounce, but if they can't break it above this 412.30 level, we will sell off. Now, if we do sell off, this is a level where we should bounce. We should bounce at this level. So I want you to save this level. This is a level that no one's going to be mentioning. This is a key level where we should bounce, and I'm going to explain to you my theory on this bounce. For those of you who stay to the end of these videos, you truly do get rewarded with the same thing, right? So you can see this like micro channel, this 3-day channel. SPY's been topping at $414, and then it's been selling back off, right? You can identify that there's a ton of heavy support at $410.30. Now, this is what I want to bring awareness to. I want to bring awareness to the retest of these wicks and of these bullish candlesticks, right? Look at this wick right here. This has not been tested, right? Look at this wick right here. And then look at this wick right here. This right here is practically the same bullish candlestick at the same level that formed today. What happened when it got retested? It bottomed and it started rocketing very, very quickly. So you better believe, man, if we're looking at this chart, this level, 410.30, has not been retested. And when it does retest, the only way up, the only way to go is up. That's the main way to go, man. Just look at it. Bullish 30-minute candle breaks out. Bullish 30-minute candlestick breaks out. It retests, double bottom, rockets higher. So if we can retest, which we likely will this week or whenever it decides to happen, I'm telling you, this is like the free money play. This is the best play I have possible for calls. This is how I see it. I see a bullish 30-minute candlestick, and when it retests, it bottoms a big upside potential. I see a bullish 30-minute same candlestick at the same level. So whenever it decides to retest, right? Whenever it decides to happen, best opportunity for calls. If you want to join Trader Society and make the cost back of the program before you even get in, you need to be hitting calls at this price alert. Under $410.50. That is my best trade idea to possibly buy calls at, 410.50. Now, if we do crack and you get stopped out, stop will be around 409.50. If you do get stopped out, the max on that, we're going to be looking to hit calls again at 408. We're going to hit calls again at 408. If we get stopped out at that level, then the true best level is at 405.50. But in terms of initial bounce reaction, we should see some sort of bounce initially at $410.30, right around that support level, right? And then you just sell. You sell into the rip, which would be above 411. You sell, you take your profits, and then you just call it, right? So that would be an incredible trade, and that trade will come. You must wait for the best setups at the best prices to come, and I'm seeing a phenomenal setup for calls when we decide to retest $410. And then if we get stopped out, we're going to hit it at 408. If we get stopped out, we'll hit it heaviest at 405.50. But you can't go wrong with calls at 410s with a tight stop and then just re-hitting at $408. Pay attention to those key levels. Like I said, man, best trade ideas for calls, try it at 410.50 first. If it doesn't work out, hit it at 408. And then the true best level would be 405.50, but we're a little bit of ways from that. And then in terms of puts, you need to keep an eye if, for puts, 415.50 is best price. Keep an eye on the 413 zone. If you're seeing, look at this, man, every single time it forms a bearish 30-minute candlestick towards this 413 level, it sells off. If you see a bearish 30-minute red candle towards the 413s, you better be hitting those puts, man, right? So now that I gave you my trade ideas, right? So the main trade idea is war. If we're seeing bearish confirmations at 413, we're going to hit puts. If we see them at 414 or 415.50, we're going to hit puts. We like calls at 410.50 below that. If we get stopped out, we hit calls at 408. Those are the main ideas for the short term. And then future, 405.50 best price for calls, right? You could save all these levels, man. This is compounding. These price alerts are going to compound with your account. Eventually, they're going to trigger, and you're going to see these are the best trades that you're going to enter for the entire month with these price alerts. You just have to be disciplined enough to just trade the best setups at the best prices. So those are some things that I wanted to clarify with you. If we do gap down tomorrow, we're going to be targeting puts at 413. If we gap up tomorrow, we're going to be targeting puts at a higher level. So what will that higher level be? Pre-market highs, wherever the overreaction triggers, wherever it decides to crash from. In hindsight, we're going to be looking at 414 and 415.50. If we gap up, we're targeting puts, 414, 415.50. If we see a bearish 30-minute red candle at 413, 414, 415.50, we're targeting puts. If we gap down, we're targeting puts at 413. If we gap up, like I said, we're going to be targeting puts as well. And then for calls, the only real idea I have for calls, we could bounce at 411.60. You can keep an eye on that. But I want this wick, man. I want this 410.40. Look at this pattern that's playing out. Look at how similar this looks. It's truly incredible on some of the similarities of this chart in terms of today's comparison. And they're nearly at the same price. You have this gap down, big red bearish candlestick. You have this gap down, big red bearish candlestick. You have this bullish recovery with some wicks. You have this bullish recovery with some wicks at the same price. It starts to trend up. It starts to trend up. And then it sells off. And then it sells off. And then it pushes back. And then it pushes back. Next day, it gapped up. And then it formed this bearish 30-minute. You better believe me, man. If I'm seeing a bearish 30-minute, something like this, just a bearish red 30-minute tomorrow, and this gaps up, I'm hitting puts. Look for that pattern. But the point is, in terms of this pattern, when it retested this key level, man, you could see it was such a similar pattern. It just played out a little bit differently today with the levels. But when it retested this 410.30, it had a nice run, man. And this 410.30 has not been retested, right? So, from today, where it formed today. And you could see it did the same thing today. It just bottomed at a higher price. Instead of it going back to 410.30, which is where I want to call is on the retest with the history to repeat itself, it formed that bullish trend reversal wick, at the previous closing price. And then it pushed back higher. So you can see, based off that pattern that I pointed out, a lot of similarities, just some different cycles, some different prices, some minor differences. But overall, same type of kind of pattern. So pay attention to that pattern that's playing out, man. I'm telling you, if we get a bearish 30-minute towards these levels, or if we gap up and get a bearish 30-minute, I'm going to be hitting puts. Keep an eye on 413. Very important level heading into tomorrow. Only interest for calls is at the lower levels. Keep an eye on 411.60, but I want 410.30 and I want 408. If we're not reacting bearish at the upper levels, I'm likely just going to sit out, man. You have to understand sometimes there's just not going to be a trade, and you don't want to be buying calls at high levels, but you don't want to be blindly shorting and buying into puts just because it's at a good level, unless it's at the true best level that hasn't been tested, which would be 415.50. But you don't want to sit here and be a bear and, short into bullish confirmation since it's at the top of the channel. You need some sort of bearish confirmation, and you need to know what it is and understand what it is that you're doing. In terms of no confirmation needed, if we hit 415.50, no confirmation needed. But all the other levels, I need confirmation. Now, in terms of calls, no confirmation needed if we hit 410.30. No confirmation needed if we hit 408. No confirmation needed at 405.50. But if I'm trading at 413, 414, I need some sort of confirmation, right? And in terms of some differences in where I need and don't need a confirmation, it depends on overreactions. It depends on initially testing, right? 415.50 has never been tested. A lot of people are going to get, screwed in terms of being in calls at that level. It will see a nice little drop on the initial reaction. Previous support will react as a resistance, gap close reversal, right? People aren't going to see the 408 coming, right? Because these levels take time to trigger, and people don't go back throughout the past in the history and study, oh, wow, there was a major bear trap created at 408. Let's buy calls. Oh, wow, there was a major bull trap created at 415.50. Let's buy puts. They don't study, man. They don't study the past. They don't, study the past, which is why they're not getting the future results that they want to as a trader. So those are the tips and tricks that I can give you. But tomorrow should be a good day, man. I like how tomorrow's setting up. It should be a good day. I'm leaning towards bearish, and I will be eyeing puts at 413 as starter 100%. You can already see we're gapping down. Big shout out to Jim C, man. He ended up swing trading puts right before the market closes into the highs. He's already up and banking on those, man. Absolutely crushing it. Also, big shout out to Dimitri. Happy birthday, Dimitri. And with that being said, guys, we're going to be closing out tonight's video. If you enjoyed it and learned a lot, make sure you leave a thumbs up and subscribe to the channel. If you do want to trade live with us every single day, along with my team and I and the moderators, it is going to be that first link down below in the description. It is a one-time fee. You get lifetime access to the Discord server, to the video lesson library, to the courses, to the live trading streams, to the live trading voice channel, to the network and community that we have. If you want to be a part of it, all of the information is explained in the first link down below in the description. I will see you guys tomorrow, live at market open.